first start, you have no idea what you need to learn.
For a beginner, should they pick one type of catalyst to study, or should they just look for any type of catalyst?
So two things I want to point out. Number one is, as a new trader, your trades should just have consistent risk. The second thing here is that
wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be The Trader. Today's gonna be a fun day because we got laptops in front of us. We're gonna be diving deep and sharing screens, and I know all of y'all love this. And I had my man Abdullah here last time, and he dived deep into a story, but today we're gonna be talking about how to be a CPT, which means
consistently profitable trader.
Thanks for being back here, my man.
Thanks a lot, man.
Absolutely.
Yeah.
So take it away.
So last time we talked, I talked about a mental framework that I developed for myself when I was first started, right?
Yep.
The reason I did this is because when you first start, it feels like you're drinking from a fire hose. You have no idea what you need to learn, but it seems like you need to learn a lot, right? Mm-hmm. So this framework consists of four building blocks, basically. But number one for me, in my opinion, is building a playbook with edge. Understanding edge, understanding positive expectancy, and really diving into data, diving into charts, and trying to come up with just maybe 1-2 setups that you can pinpoint, like maybe 20, 30, 40 different instances of that, like of those confluences. And you can say, hey, out of 20 trades, I'll win 16, right? You put your finger on the win rate, the average win rate, and average R&R, right? So that's the first step for me. And then the second would be starting off with a solid risk plan, which I'll share in a minute. And then execution. It takes skill to get in and out of trades.
It does.
It takes skill to not move your stop loss, right? It takes skill to let your trades run. As we mentioned, the quote from Tom Hogard, you should have hope when you are winning and you should have fear when you're losing, right? But oftentimes it's the reverse, right? And then psychology. So psychology for me comes in, for me, it came in the beginning because after learning about trading, I went live within a week, right?
So it's like right then and there. Yep.
Yeah, I'm blowing money, right? But if I could guide someone, I would say go through these steps first, practice in the sim for just a small amount of time, and then start off with small risk, right? And then psychology will become more of a thing as you start to size up and as you risk more. So we'll jump into the risk management first. Now, what I have here is a quick spreadsheet. It looks simple, it looks mundane, but what's here is two things I want to point out. Number one is the successful traders, they don't risk the same amount on all of their trades. Many of them don't, right? But as a new trader, your trades should just have consistent risk. So I use this spreadsheet. There's B, B+, A plus trades, but everything in the beginning is a B, right? Everything is all the same. So that's the first thing. Second thing here is that I would recommend that you give yourself stop limits, right? So let's say you have 20K.
Okay.
And it takes about 2 years to become consistent.
Okay.
All right. So you should give yourself monthly stop, weekly stop, daily stop to make that money last over maybe 2-year period or a 1-year period, right? This way you won't run out of money too fast because you shouldn't be risking a lot anyway. Now I know this all sounds like advice you get from your mom or dad, and it's like, man,
I want to get in.
Right, I want to get in. Nobody's gonna do it, but I'm just going this far so that maybe you'll take a little bit, or maybe the beginner that's listening will
hopefully
take
some
of it, right? And say, you know what, I'm going to start off more conservative in the beginning, right? So you have this. We'll just take the daily stop as an example. So let's say you have, whatever account size. You give yourself a daily stop, right? And if you hit that daily stop, the next day you divide your risk by 50%. Right, until you make the money back, right? So this is how you just kind of, in the beginning, hold on to that money, right? But the main thing I want to just show is that daily stop, keep the risk the same, and then start off with maybe 1 share in the beginning. Go sim so that you know how to, execute just roughly, right? You know how to buy the ask, buy the bid, sell the ask, sell, all those different combinations and how to calculate your lot size and stuff like that. But you start off with 1 share and then you can scale up. But implementing that daily stop will help you from spiraling out of control and losing all your money. All right, so that's the risk side of it. Now we'll get into execution and playbook. I'm gonna show 2 setups.
Okay.
One will be the more macro setup. This is not like the easy money trade. Then I'll show like a more easy money, like day-to-day type of trade.
Okay. I want to take a couple of seconds to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. And Forbes Advisor did an exhaustive research on day trading brokers. And Cobra Trading was the only broker awarded in 2 categories, one of them being customer service. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. Look, I've experienced many different brokers, and it's why I choose to use them every single day, and I'm proud to have them as our sponsor. Sign up now by using the link below, and Cobra Trading will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. Now let's get back to the show.
So this trade was a favorite of mine just because of the surrounding context, the surrounding circumstances. So I traded maybe like 5 tickers on this one day, and all of them were linked together because of what happened. It was some monetary policy changes that happened from the BOJ. So I traded NASDAQ, I traded the Nikkei, I traded the yen, and a few other tickers, right? So this was in August. So back in August, you had, I'll start off with the Nikkei. So Nikkei, the BOJ, they raised their interest rates, right? So playbook, here we go. So this is what I was talking about. So idea generation, number 1. Number 2 is setups, right? And number 3 will be the trade execution. So idea generation is, okay, why is the ticker in play? Why is the symbol in play? What's behind the move? Why is there unusual move that we're expecting, right? And there's some catalyst or some sort of narrative. This can be on the macro, this can be from the macro perspective, or just intraday. Maybe there's earnings or there's some sort of report that's causing the volume or unusual move. Second thing is the setup. You still need some sort of, like, you can be a chart wizard, but you still need some sort of setups to structure a trade. Where do I put my stop loss?
Yes.
Where am I taking profit? All of that. And then third is the actual execution. Entries, exits, scaling in, scaling out, trailing stops, all that kind of stuff. So the reason I'm sharing this is that at any particular point, a beginner could say, man, you know what? I have none of this, or you know, I know I pretty much have like an idea of catalyst, or I'm scanning the market. I see what's up 20, 30, 40%. But now I need to work on my setups, right? What setups work in different types of tickers or for different types of catalysts, right? Or maybe they have setups down and the trade execution is poor, right? So, you know, by breaking down the problem into smaller pieces, you're able to kind of put your finger on things, right? And work on very focused, specific areas.
Instead of drinking out of a fire hose.
Yeah, instead of drinking out of the fire hose. Like, you show up every day and you think you have to work on everything. But you actually can just focus like maybe a week or 2 on
number one.
Number one, right? Yeah. So why do stocks run up 30, 30, 40% in one day pre-market? Okay, let me start to study that, right? So that's the playbook. So now I'll get into idea generation for this particular setup, right? So what you start to see happening on this Thursday, this was Thursday in August. So BOJ raises their interest rates. So you start to see the Nikkei drop, and then that's one catalyst. And the reason why this one is such a big impact is because this interrupted something called the carry trade, right? So generally, investors may borrow from a currency that has a lower interest rate, and they'll invest into other currencies or invest into stocks, right? So this was like a historic type of monetary policy change. So what you start to see is, like, you see the Nikkei start to drop after that. So Thursday it drops, Friday it drops, and then Monday, like Sunday night, when trading opened, it drops. All right, so that's one thing that's happening. Then on the U.S. front, also, there's some U.S. data that came out. If we look at NAS, we see NAS also Thursday here. It starts to drop Thursday, Friday is dropping, and then also Sunday evening when trading starts to happen, again, it starts to drop. So this panic starts to ripple through the market, right? And if you look at the Nikkei, this is like a 20% drop here. And if you compare this to the drop that happened like back when COVID hit, which was like an anomaly or outlier, a black swan almost event that we probably will never, or hopefully we won't ever experience something like that again. But the drop there for like when COVID hit, you know, was minimal compared to, okay, you have about 7% drop on the Nikkei, right? But within 3 days, and that's just over time, right? But within 3 days, you have this drop here that happens. So generally, so this is a panic. This is panic happening. So generally, like if you study moves like this, there's going to be, or it's likely to be some sort of reversion back to the mean, right? Especially if it's not based on strong, like fundamental data that should exist or be persisting over a long period of time, right? So this major drop happens. You see also Bitcoin, Ethereum. I won't walk through each one of these just for the sake of time. But this right here is setting up the idea. That's like number one, idea generation. So this is more of a capitulation type of reversion trade. A lot of people trade like the parabolic short.
It's the reverse.
This is the reverse of it, basically, right? So this is setting up, and then you have the idea. Now you have to look at the setup. How can I structure risk to reward? So I'll just walk through that quickly. And again, this is one of the
and this
more.
Is, I would say, is a little bit more complex
This
for
is
the newer
what
trader.
exactly,
just FYI, just
exactly
it's
right.
more you're looking at macro.
Yep.
You're looking at the news.
Yep.
At the end of the day, like I 100% agree with what you're saying.
Yeah. So just showing this one, but then I'll show like a day-to-day
simple.
one.
Yep.
Yeah, I'll show a day-to-day one. It's just because we touched on this during the podcast. So you see, we have this major drop, and then over time, we eventually recover. But what I caught was more of this initial move back up, and then I'm out. So what I'll do is I'll probably just go ahead and jump over to the like day-to-day setup. But as this trade starts to decline, what you start to want to look for is bottoming out, right? Okay. So you have a higher high created. So you have lower highs, lower highs, lower highs. You have this bottoming out. If you get in earlier here, that's fine. But you're a little bit ahead of the game, right? Yeah. So it starts to be, as you start to cross back through VWAP, you start to reclaim some of these levels. You drill into the lower time frame, and then you can start to size into this position. But once you have that stronger, higher high created, that break of structure, and then the pullback, then you have confirmation there before you get into the trade, right? So yeah, this is like one of the more macro size ideas, and then I'll go ahead and jump into like a day-to-day trade.
Question though, on this one, this type of idea, are you trading it off for higher time frames? Are you zooming in on the smaller time frames when you're executing? Could you give us the audience an idea of what you're doing? Once you see this double bottom, you see the higher high, you see also, which I'm sure you looked at, is the downtrend being reversed. Which is also indication of the higher high. But you can see a trend line. If you drew it there, it immediately breaks above that. Then we have the retest of that previous high, which ends up holding. So how do you structure this if someone was watching this and they're like, man, I saw that, you know what, I see stuff like this, but I don't know how to structure it.
So what I recommend is that as you start to mark up levels, right? So you have your higher time frame levels, and then what I do is you can trade from the higher time frame, but we'll have major stop losses that aren't even necessary, because as we start to break above the break back through those higher time frame levels, you can then zoom into 5 minute, 2 minute time frame, and then that's where you structure your entry and stop loss, right? So so for this example, it's similar to the next one that I'll show, and that's where the geometry comes in, right, of the chart, like the pattern itself, right? As I mentioned, higher time frame levels, and then you zoom in to your execution time frame, 5 minute, 2 minute, some people use 1 minute, and that's where you are looking for a place to put your stop loss. You're looking for a pattern there where you can, exactly how much you're going to risk. That's where you go back to like that risk management sheet that I had. You know how many cents if you're trading stocks, or if you're doing contracts, if you're trading futures, you know how much you're risking, so that you know exactly how much you're risking, and then you can measure your risk to reward, right, on the trade, and that's what you'll do on the lower time frame. So what I'll do is I'll jump over to one of the day-to-day trades, which same concept, but I think that one was like more of a plus setup, like something that doesn't happen very often. That's where I'll put more risk on. This one right here would be more of like the B setup, B plus, where it's like just a day-to-day grind, and you're using levels, you're using volume. Maybe the ticker is in play because there's a theme, or just like intraday news, right? So same concept here, where the DJT, right? So DJT, I want to use Tesla so bad, but Tesla is like, it's just obvious, the election just passed, right? But I had to reach back and find some other tickers that aren't so, or other trades that aren't so sexy. But this one, DJT, obviously is in play because it was just running up until the election, right? So this is still pre-election. So you have these waves of price running up, then you have, a topping, and then you have a sell, it's selling off, and then it runs back up. So this would be the case. I'm just going to use a short side example here, where when it comes to patterns, these are patterns that you can actually, if you look at 100 charts, 200 charts, 300 charts, and you're looking at something that has volume, the relative volume is high, has a lot of volume that's being traded, you can find these patterns and they work. You're going to take some losses, but if you can get really good at recognizing these patterns and pulling the trigger, these are setups that can pay off, right? So this seems super basic, but this is a pattern when you have some consolidation, right? Some sort of pending resolution here. Then you have a breakout of that high volume. You have a return, and price holds, and then you have a continuation, right? So this works on the long side or the short side,
right?
And depending on the context, one may work better than the other. So here, DJT, as I mentioned, it ran up higher time frame levels that I have marked up here, and we have this topping happening, right? So if you wanted to go on the short side, you may be kind of early if you're shorting on this side of it, right? Mm-hmm. But once the topping happens on higher time frame, then this is one of the trades that becomes obvious, because here post market, pre market, we're breaking levels. Then you have this pending resolution, and at the open, we're looking at the price tries to push, right? Fails twice, then breaks through this higher time frame level, right? Now we're sub VWAP, price returns here, and then you have execution, right? So this will be one of the, an example of this one doesn't require all of the sexy, fundamentals. Yep. This will be one of the more day-to-day types of setups. There is some awareness of what's going on with this particular ticker, right?
Election.
Right. Election is here, right?
There's still a catalyst.
Still a catalyst.
Which creates the R-vol.
Right. That creates the R-vol, right? We want to ask ourselves, okay, what is everybody like piling into?
Because that creates smooth price action.
That creates the smooth price action. Yep. There we go. That creates the momentum, right?
We've done this before.
Yeah. Yeah. So this will be one of the examples, right? So I think just this for me, everybody has a different experience.
Of course, yeah.
When I started, I just opened up a chart. I had no idea what was going on, and I'm just like looking for a pattern, right? But when I added that front side, the idea generation, whether it's something that's lasting for weeks, or an outlier, or
even
it's just
day.
Intraday, right? Just that's right there, like just it's intraday, right? Yep. You have these stocks that run up, and maybe it's a crappy company. You already know, right? Crappy company, and you take the short side, right? Or it's something that, like, I traded the children's place. Like, I bought my kids their clothes from there. Yeah. And the earnings came out. It's not like a crappy company. It's a company that exists, but it's a lower price stock. It runs for like 12 days, on the long side, right? So so this is just an example. Now, last part of this will be the execution.
Yes, I was going to dive in. Yeah, go ahead.
The reason why, in my opinion, why these patterns are so significant is because it allows you to structure that trade. So once you have the range, this pending resolution, price pushes up, fails to the upside, and we had already had the top there. When price breaks, there's two different trades here. There's a breakout, right? But if we look left here, this is a level. So, you have to have significant reason, or you don't have to, but you may want to have significant reason to try to take the breakout. But once price has broken and cleared this level here, then it's returned. Now you're just waiting to see, like, okay, are we going to fail? Is it going to be like a fail follow through here through VWAP, right? So as there is, you can use just a price action. This is where you're looking at volume. This is where if you're reading tape or level 2 comes in, and then you have where now you have this distinct level here, right?
Yeah, you
where
do.
It was a support. This is distinct. It has become resistance, and this
gives you with the daily.
It's also associated with the daily, right? So now this gives you an area to structure a trade where you can execute a trade. You know where you're going to put your stop loss. You know exactly how much you're going to risk, and then you have a target here, right? This could be like the next low, right?
Yep.
And then maybe as price starts to play out, depending on your style, some people like to scale out a little bit earlier. Maybe you scale out at the next low here, maybe 50%. And then everything else would be, I don't have like the 9 EMA here, but there's many different reasons to close, right? That people may use, right? But maybe you hit 50% out here, and then as price is pushing, you paying yourself along the way. So this is just, in a nutshell, idea generation, the election here, that's our theme. The setup is there's a topping on the higher time frame. Now we have a clear lower time frame setup here. And then the execution comes down to now us having a clear entry, exit, and then a plan for scaling in and scaling out. So.
Could you explain for everyone watching this, because I know you already had these levels drawn for the higher time frame. Could you show us how you came up with those levels in the higher time frame?
Absolutely. Yep. Excellent question. All right. So I like to use the daily, right, and the 30-minute time frame. So what you saw there, generally, I'll start with the daily so I can have some sort of higher time frame view, and I'll be aware of some higher time frame levels, especially if it's an established ticker, right? So I'll be aware of the higher time frame levels. So I'll just start there, and then I'll just drop down to the 30-minute, and then I'll mark some more obvious swing points, right? So what you saw earlier were just some of the obvious swing points on the 30-minute time frame, which aligned with some of the daily swing points. It's really simple to do. Sometimes you can get caught up on the 2-minute, 5-minute time frame when there are some levels that you should be aware of. There can be potential reversals, right? So daily, 30-minute, and then from the 30-minute, I'll go down to my execution time frame, and I'll just be aware of those swing points that exist on the 30-minute.
Okay.
Yep.
So someone who is watching this and they're like, okay, the idea generation catalyst, it seems like that's a huge priority and for any type of play. Now, for a beginner, should they just pick one? Should they pick only news plays? Should they pick one type of catalyst to study, or should they just look for any type of catalyst that creates the volume that's needed and just trade all of those? Any advice on that?
Yeah, in my opinion, one of the easiest ways that a beginner can get used to the whole catalyst thing is just looking at the top gainers and top gappers.
Okay.
Because generally those have some sort of catalyst, right? So you may not have some sort of historical reference to say when the election is here or when the BOJ does something or when there's earnings. But if you look at the top gainers, top gappers, a lot of times they'll have catalysts, and you can over time, just maybe over a month, just kind of catalog what you see. What are the reasons why these are up 30, 40, 50%? And that way, then you start to have this sort of you build this catalog, right? And that just takes a month, a month of just showing up, right? And then from there, you take a deeper dive and you sort of kind of measure the move after these particular catalysts, right? Okay, there was earnings here, typically earnings, post-market, they do well. The next day you have a strong breakout, right?
Right.
Or maybe it's a pharmaceutical company and there's a phase 1, there's a phase 2, there's a phase 3. Which of these are the strongest? Oh, phase 3, generally you may have a runner, right? So you start start at the top gainers. You see the catalyst,
news with them.
Build your catalog, and then you do your study from there. Yeah.
Look, man, I'm curious because I know people are going to be wanting to ask more questions, and they're probably going to be like, okay, where can I learn more about Abdul? So where can they learn more about you?
Yeah, so I just have a little humble YouTube channel. Just type Abdullah Rashid Trading, and then you'll find me there.
Perfect. Well, look, everyone, make sure to rewind this because he shared some great stuff, especially when it comes to the process, so that way you don't feel like you're drinking out of a water hose, which I love that you broke it up into just different categories because it really does become overwhelming for a trader. So I'm sure you can share this with some other new trader who's trying to figure this out and they just don't know where to start. This is a good place to at least structure how to start studying and structure how to find yourself to become a CPT. And Abdul, thanks for being on the show, brother.
Thanks a lot, bro.
Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.